Hello everyone, I am Srinivas. I welcome you all for my today's video lecture on how to prepare final accounts using simple steps. In my previous lecture, I was discussing how to prepare final accounts using simple steps. We had a discussion on basic adjustments. Now we are moving to moderate adjustments in the sum. So let us start a discussion on the current sum. From the following trial balance of Merces Chanakya Enterprises, prepare trading account, profit and loss account and balance sheet for the year 2021-2022 financial year. So this is about trial balance, debit balance given, credit balance given. These are the following adjustments. The first adjustment is closing stock. Second adjustment is accrued commission. Third one is depreciation on fixed assets. Fourth one is provision for doubtful debts. This is a new adjustment for that, and we are going to discuss the steps, the simple steps we have to follow while preparing of the final accounts. So first step is we have to prepare the format or pro forma for trading account, profit and loss account and balance sheet, commonly called as final accounts. The second step, we need to identify the adjustment items in the trial balance and put the tick mark or circle for identification purpose. The third step is post the items from trial balance to final accounts according to their nature. Fourth step, post the adjustment, and here every adjustment will be recorded 2 times because we are following the double entry system of accounting. And final step is finalize the trading account to find out gross profit or gross loss, and finalize the profit and loss account to find out the net profit or net loss, and add net profit to the capital less net loss from the capital. If any drawings are there, we should always subtract drawings from the capital. So let us begin the first step. So first step is already completed. I have already prepared the pro forma for trading account, profit and loss account and balance sheet. So first step is completed, and we move to the second step. Identify the adjustment items in the trial balance and put the tick mark or circle for identification purpose. So first adjustment is closing stock. We need not put any tick mark for this adjustment. Always closing stock adjustment will be shown trading account credit side and balance sheet asset side. So we need not put any tick mark for the closing stock. Directly we have to post in 2 places. One is trading account credit side and balance sheet asset side. Second adjustment is accrued commission. So we need to identify the commission in the sum. So in the given sum, the commission is not given. Sometimes even though the adjustment is given, but the particular component may not be, we may not be trace that particular component. So in that particular case, we simply, in case of accrued commission, we need to add it and we need to directly show under the asset side. So the particular commission is not given in the sum, so we can directly post that item. Third one is depreciation on machinery, furniture. So we need to put the tick mark for the machinery, and the next one is furniture. So we need to do adjustment for these 2 fixed assets. The last adjustment is provision for doubtful debts at 5% on sundry debtors. So this adjustment always we need to do against the sundry debtors or sundry debtors. The first item is that only. So in addition to that, we have always post capital in the inner column. That is also we need to highlight that, and we have to check clearly any returns are there. Purchase returns, purchases available, purchase returns are not available credit side, so no need to tick the purchases. Sales returns, in a given sum sales returns are given, so we need to put the tick mark for the sales returns, and we need to put the tick mark for sales also, because sales returns always will be subtracted from sales. Similarly, purchase returns also subtracted from purchases. In the given sum there are no purchase returns. Purchase returns also called as return outwards. Sales returns also called as return inwards. So this is the second step. So second step also completed, and moving to the third step, post the item from trial balance to final accounts according to their nature. So according to the order we need to post the item, and whatever the item you have identified, you put a tick mark and ensure that that particular item will be shown in the inner column in the final accounts. So let us move to the third step, posting of all the items from trial balance to final accounts. The first item is debtors. So this debtors we need to show. A debtor is an asset, so go to balance sheet. So debtors amount will be shown under the asset side, and the amount of debtors given in the sum 52,000. So this 52,000 we have to show in the inner column, because there is an adjustment for debtors. So moving to next item, cash in hand. Cash in hand is a asset 2392. Cash in hand, we have to give some gap here because we need to do adjustment. Cash in hand, there is no adjustment for that, directly we have to post outer column. So moving to next one, furniture. Furniture is a fixed asset, there is an adjustment for asset furniture. Furniture 3,500, adjustment is given against furniture. We need to do adjustment later stage. Next, motor car is a fixed asset, and there is no adjustment for motor car 22,000. Motor car 22,000. And moving next item, purchases 1,45,000, and no purchase returns given, so directly we can show purchases trading account debit side 1,45,000 to purchases 1,45,000. Next one, sales returns. So always sales returns will be subtracted from sales. So sales amount is 2,92,000. So from that we need to subtract 2,600. First we enter sales amount 2,92,000, trading account credit side. By sales 2,92,000. And sales returns given, always sales returns will be subtracted. S by R means sales returns 2,600. So at the end of the finding of the gross profit or gross loss, we'll subtract this amount and we'll show the outer column the amount. And next one, salaries 8,420. Salaries we pay for the employees. Salaries are indirect expenses. All the indirect expenses also called as non-manufacturing expenses, as well as losses will be shown debit side. And indirect incomes other than trade, indirect incomes, profits will be shown credit side. So salary is the indirect expenses. To salaries, because the amount is given debit side, if amount is given debit side, it is a paid. So salaries amount 8,420. Directly we can show outer column. And next one, opening stock is always trading account debit side, 11,400. Opening stock, there is no adjustment for opening stock, directly we can show in the outer column. Next one, motor car expenses. Motor car expenses is considered as indirect expense, 3,600. All the indirect expenses, profit and loss account debit side. To motor car expenses, no adjustment for that, directly we can show in the outer column. Equipment is a fixed asset to the company, no adjustment on that. Equipment is an asset. ₹2,508. An insurance premium is an indirect expenses to company, 2,400. To insurance premium, no adjustment on that, so directly we can show in the outer column. Cash at bank is a asset to company, cash at bank, $6,200. Next one, machinery. There is an adjustment for machinery. The value of machinery 24,000, fixed asset. Machinery 24,000. Next one, wages. Wages we pay for labor who work in factory. Factory related account is trading account, so trading account debit side. To wages 23,600. General expenses. General expenses is always indirect expenses. To general expenses, the amount of 2680. 2680. Carriage inward. Carriage inward is always direct expense. At the time of transporting of raw material from supplier to factory, the factory management usually incurs such kind of expenses. They are called as direct expenses. Carriage inward is a direct expense. Carriage inward is also called as carriage. Carriage inward is also called as carriage on purchases. Carriage inward is a direct expense, 2040 rupees. Next one, carriage outward is a indirect expenses. Carriage on sales. A company incurs these expenses to deliver the product to the customer outlet, customer places, destinations. Such expenses called as indirect expenses. Carriage outward is also called as carriage on sales. Indirect expenses. All the indirect expenses will be shown P&L account debit side. Carriage outward, the amount of carriage outward 1630. So moving to next item, the transportation expenses within the bracket mentioned factory. Within the bracket, if it is mentioned factory, we have to show trading account debit side because it is considered as direct expenses. Within the bracket, if it is mentioned office, transportation expenses within the bracket office or administrative or indirect is given, that will be shown under the profit and loss account debit side only. If nothing is mentioned, just transportation expenses, that is also considered as indirect expenses. Here clearly mentioned factory means trading account debit side. So trading account debit side to transportation expenses 6430. No adjustment for that, directly we can show outer column. The next one, drawings. So I already clearly mentioned drawings. Whenever owner personally withdraws cash either from business or business bank account, personal use, whenever owner uses either cash or goods for the personal usage, that is considered as drawings. So drawings amount always will be subtracted from capital. So first we enter the capital. So capital is always liability. So capital amount always we have to show in the inner column. The amount of capital is 20,000 rupees. First we have to subtract drawings. If any drawings given, we have to subtract it. The drawings amount given in the trial balance 8,000 rupees, and we should show the amount in the inner column itself. This 12,000 is called as net capital. Next one, rent and taxes. Here rent, sometimes factory rent is given, we have to show trading account debit side. Office rent is given, we have to show P&L account debit side. If nothing is mentioned, we have to directly show P&L account debit side. So P&L account debit side, to rent and tax, the amount of rent and tax 3600, rent and tax amount 3600 rupees. So all the debit side amounts we have posted to the trading account, P&L account and balance sheet. Even capital also we entered. Only two items left over. First one is bills payable. We have to consider bills payable is a liability. So bills payable is a liability. So we have to give some gap here because to do adjustment. So bills payable liability, no adjustment, directly we can show the amount outer column. And next one, sales amount is also completed, capital is also just now we have entered, and we completed the third step and we are moving to fourth step, posting the adjustments. We have to post the adjustment, every adjustment twice or 2 times according to the double entry system of accounting. The first adjustment is given in the sum, closing stock. So closing stock we have to show trading account credit side. So by closing stock, here I am highlighting with another color. By closing stock, the amount of closing stock 35,000. This is the first time, and the second time we have to show asset side, closing stock 35,000. So 2 times we have posted. First time trading account credit side, second time we have to show balance sheet asset side. So first adjustment completed. Second one, accrued commission, the amount is 3600. So whenever accrued commission, there are 2 types of commissions available. One is commission paid, another one is commission received. Commission paid is indirect expense, commission received is the indirect income. So this adjustment is related to income. So and moreover, accrued commission is not given in the trial balance. So whenever accrued or receivables, means commission receivables, is given in the adjustment, what we need to do, how to adjust this adjustment. First we need to add it, because the commission we have to receive from third party, so that we need to add it to the existing commission which is given in the trial balance. If that particular item is not given, directly we can show in the outer column. Second one we have to show under the asset side, because it is a receivables. Receivable is always asset. So what we need to do that here, in the adjustment commission is not given. So commission, accrued commission, what we need to do that, in the P&L account we have to add it. So that particular commission is not given, so directly we can show as by accrued commission. The amount of commission is 3600. First time is over. If commission is given, by commission received is given, we have to show in the inner column, we have to add to the commission. Here it is a 0. So 0 plus accrued commission 3600. Second place, asset side, So accrued commission, that is 3600. So moving to the third adjustment, there are two adjustments are there. One is the depreciation on machinery 10% and depreciation on furniture 10%. So here for machinery the depreciation is 10%, to 24,000 into 10 by 100, 2,400 rupees. And again this 2,400 rupees depreciation is always considered as loss to company. So we have to show profit and loss account debit side to depreciation on machinery 2,400. So likewise furniture, so depreciation on furniture minus depreciation at the rate 10%, 3,500 into 10 by 100, 350. Again this 350 rupees we have to show P&L account debit side because it is a loss. Depreciation on furniture 350. So last adjustment is provide for doubtful debts 5% on sundry debtors. So this adjustment always we need to do against debtors. So minus provision for bad debts 5%. For 10% it is a 5,200. For 5% it is a 2,600. Again this 2,600 rupees bad debt is a loss. All losses have to show P&L account debit side to provision for bad debts 2,600. So we have completed the fourth step. The final step is finalizing of the trading account, profit and loss account, and trading account, profit and loss account, and balance sheet. First we will move to trading account. So we balance it. So first we have to verify clearly whether the debit side balance is more or credit side balance is more. So using calculator, so the amount of sales 2,92,000 minus 2,600, 2,89,400, 2,89,400. So again using calculator, 2,89,400 plus 35,000, 3,24,400. So here in the trading account, the total credit side balance is more than debit side balance. 3,24,400. 3,24,400, and using calculator from this 3,24,400 we need to subtract all these 5 items. So 3,24,400 minus 1,45,000 11,400, 23,600, 2,040 and 6,430. And whatever the amount we got, 1,35,930. This is the amount exactly we got it here. 1,35,930. 1,35,930. This is called as gross profit to gross profit carry down. So this amount we need to transfer to P&L account. So we got gross profit. Why? Because credit side balance is more than debit side balance. Sometimes debit side balance will be more than credit side balance. In that case we get the gross loss. So here credit side balance is more than debit side balance. So this 1,35,930, 1,35,930 we have to transfer to profit and loss account by gross profit brought down. This is transferred figure, transferred. So 1,35,930. 930. So again we need to total this P&L account. So using calculator again, 1,35,930 plus 3,600. So by looking at this number we can understand that the credit side balance is more than debit side balance. 1,39,530, 1,39,530. The same amount I am entering here, 1,00,000. 1,39,530. So from this 1,39,530 we need to subtract all these items using calculator. 1,39,530 minus 8,420, 3,600, 2,400, 2,680, 1,630, 3,600, 2,400, 350 and 2,600. So the final amount is 1,11,850. 1,11,850 exactly we got it. 1,11,850. 1,11,850 because this is called as net profit, because the credit side balance under the P&L account. Credit side is an indication of what? Incomes and profits. So credit side balance is more than debit side balance, so that we got net profit carried down. So this amount we need to transfer to balance sheet. We need to transfer this amount to balance sheet. Sometimes debit side balance is more than credit side balance. In that case we'll get net loss. So this 1,11,850 transferring to balance sheet, and when the rule is that whenever For the capital, the rule is whenever the net profit comes, we need to add it. If net loss comes, we need to subtract it. So we got the net profit, right? 1,11,850. That should be added to capital. So add net profit, the amount of net profit 1,11,850. So 1,11,850 we need to transfer, we need to total it. The net capital here, net capital is 12,000. After adding it, we are getting 1,23,850. 1,23,850. The final amount, we need to total it. First we total the total liabilities, 1,23,850 plus 22,000. So 1,45,850. 1,45,850. And we check the assets also. So first 52,000 minus 2,600, 49,400, 49,400. Similarly 3,500 minus 350 is 3,150, and similarly 24,000 minus 2,400, 21,600. 21,600. So we need to total the assets here. 49,400 plus 23,92 plus 3,150, 22,000 plus 25,08 plus 6,200, 21,600 plus 35,000 plus 3,600. So we got it 1,45,850 exactly. 1,45,850. As the rule clearly mentioned that all assets of the company equal to all liabilities plus capital or equity. So as per this rule, all the assets of the company is same as all the liabilities plus capital. So whatever the process we have done is correct. And in the next session we are going to start with the ratio analysis. So thank you one and all.